Okay, folks, so in today's video, I want to give you a pragmatic look at the current GME situation. We're going to be talking about three different things today. A, why I believe the GameStop story matters. B, whether I believe there is legitimately money to be made here and through which methods. And then finally, we're going to be talking about the unique opportunity that GameStop has to completely pivot and become something closer to a Berkshire Hathaway. And as always, make sure that you do your own due diligence on all ideas presented here on the channel. If you're the one taking the ultimate risk, you got to be the one doing the ultimate frisk. And today's video is sponsored by our free ZipTrader newsletter. You can sign up with that link down below. I've been traveling around the Greek islands the last week or so, and while I haven't been able to make as many videos, we have been sending out near daily email breakdowns on what's going on and our research and the top ideas. So make sure to sign up and don't miss those reports. Okay, so I want to get into why this GME situation actually matters. So at the end of the day, we as retail traders, investors, market participants, we enter the market with the goal of making money. The financial system is set up in a way that if you decide to just keep your hard-earned money saved in an account, it gets eroded through inflation. You work hard to make your money, the government takes nearly half of it away through taxation, even before you start talking about property taxes and sales taxes and blah, blah, blah taxes. And whatever's left, they take through inflation. And so the only way that we have left to protect ourselves is essentially by investing our savings in a investment, whether that's the stock market or real estate, but the stock market is the most accessible. But of course, the market is not a fair place. Sure, the American market is the best in the world, but it's certainly not a fair place at all. And it's increasingly unfair year after year after year. In fact, the very same people that run and maintain the overall system that we have, well, they themselves abuse it. Why do I say abuse? What do I mean by abuse? Well, I can't imagine any other reason why Congress would continue to beat the market year after year after year, and why some would see not just above normal returns, but many multiples above normal. Congress will vote to shut down the economy and then at the same time make trades based on that information before that information even becomes public. Congress will buy war stocks and then vote on a war. Congress will see a war coming and then buy more war stocks. Congress will buy tech stocks and then vote on monopoly powers. But what about Wall Street? What about the absolute murder that Wall Street gets away with because of the direct line communication they have with Congress? Why do you think that Wall Street is spending billions and billions of dollars on political campaigns? It's simply because they treat influencing the government as a cost of doing business. And quite frankly, this is bipartisan. Based on the year and era you look at, Wall Street may be giving more to one party or the other, but they always give, and they give to both parties. If you're a fund on Wall Street and you're not giving money to politicians, well, you're going to be out of business real fast because all of your competitors are, and they're getting some unfair advantages from that. Why do you think Mr. SBF gave so much? Because he knew that there's power in donations. In my opinion, his biggest mistake was he didn't donate enough. And so folks, when you live in a world where you have absolutely no choice but to invest in the stock market, and that stock market has a lot of other players exercising undue advantage in it, well, it becomes very, very frustrating to say the least. But Charlie, what exactly does this have to do with GameStop? Well, GameStop is simply a crossing point where retail traders have identified a company that they like at the same time when many large institutional big money short sellers have decided it's a company that must go bust, must completely die. And because of that, we've had the first time where many retail traders and investors and participants have gotten together and shared their due diligence and their overall breakdown on this stock. And in doing so, brought to light a lot of the corruption and unfair situations that happen when you got a stock like this. Now, certainly the GME movement hasn't been perfect. There's been no shortage of folks spreading misinformation and people buying based on misunderstanding. But nonetheless, the story here is that folks came together to share research, and that shed light on a lot of unfair advantages and practices that have been going on Wall Street for decades. And that's why this really matters. And you may think, but Charlie, okay, wait a second. With all that's going on that's bad in the world, how can this situation matter so much? Why does this situation matter so much? I mean, it's not like there's a war going on here. Well, quite frankly, I mean, there's a fight against the middle class in almost every country, especially in America. I'm not in America right now, I'm in Greece, but in America as well as here and in all of Europe, there's a fight against the middle class, and a lot of politicians are trying to take away more and more rights of the middle class and arm the most powerful people in society. And fighting to give everybody a fair shot through a fair and free market is so important. Okay, Charlie, that's great, but look, I didn't go into the stock because I'm a revolutionary. I went into the stock because I wanted to make money. So is there legitimately a way to make money in the stock? Well, I think that regardless of whether the stock ultimately makes people money or not, I think that it was a win because it brought to light a lot of the injustices in the system. However, I also think there's a few different ways that it's going to be possible to make money in this. Obviously, there's 4 different routes you can generally take with this. You could trade shares, you could trade options, you could hodl until the massive squeeze if that happens, or you could do a long-term investment. So obviously, trading in shares is pretty straightforward. You buy the stock low, you ride the momentum, you have a stop loss, and then you take profits. Because the stock has gone up and down so many times, that's been a very, very effective strategy. Options also fairly straightforward. Roaring Kitty built out his 9+ million share position this way. Buying call options, exercising call options, owning more shares, rinse and repeating. You can also alternatively elect to sell the call options or exercise them and sell the shares. You can elect to hodl until whatever you deem as a massive squeeze happens, or you can invest long-term in the company. But which is the most appropriate? Which makes the most sense? Obviously, you got to do your own research to come to your own conclusion on this, but my view here is that clearly trading shares and options has been incredibly profitable for many people. And when you do that, there's ways to benefit from not just the stock going up, but also when it goes down, when it bounces back up, the back and forth, there's opportunity and volatility. Obviously, this is a trading channel, so respect that I'm coming from that perspective. There was a period where our alerted GME calls went up some 10x, and I'll continue to try to find those plays, but at the same time, I also believe there's opportunity as a bigger picture squeeze play. If short sellers are banking on GameStop going bankrupt, well, it's going to be a long wait. The company has so much cash on its balance sheet that it could simply invest in T-bills and erase its recent quarterly losses easily. For those believers in a bankruptcy, obviously that's not happening anytime soon. This company has a decade plus left. So from a logic standpoint, if you're in over your head shorting the stock, it makes a lot of sense to expect a longer term squeeze. Now, big caveat here, just because you have a great setup now doesn't mean you always will. I saw a really nice squeeze opportunity with AMC many years ago, but what AMC proceeded to then do was to offer, dilute. I've called for the resignation of the CEO over there, Mr. Adam Aron, many times, and way before he even did half the offerings, because I felt that he was going to offer it into the ground, and that's exactly what happened. Sure, GameStop has had some dilution, especially over the last couple of months, but if you compare GameStop to AMC, it's night and day. AMC had about 24 million shares outstanding in September of 2020. Today, it's got about 294 million shares outstanding. GME in September 2020, they had 260 million shares, and today they have 426 million shares. So sure, GME's float has expanded substantially, but nowhere near what AMC's has. AMC's shares outstanding 20x'd. GME's hasn't even doubled. For those who say that endless offerings are good, you got to remember, folks, that the whole point of a short squeeze is that there's a rush to buy shares of which are in a very limited supply. You remove the limitation on supply, the squeeze thesis gets destroyed. If you are printing out shares like toilet paper, it becomes less and less valuable to have said toilet paper. And so regardless of the two big offerings that we already had over the last couple of months with GME, I'm hoping that Mr. Ryan Cohen doesn't go the way of AMC, and I think there's a solid chance that he doesn't. So from a squeeze perspective, I believe there's a thesis there, and there's a big possibility there. How far that could go, it's anybody's best guess. There's a lot of human psychology there, a lot of market psychology. There's some regulation there as to how regulators react. And so for me, when you're looking at these different points, there is a squeeze thesis. It's hard to quantify, but there is a squeeze thesis. Now, what about a long-term investment? Where's the argument there? Is there an argument for a long-term investment? Well, for me, I don't personally like the video game retailer business, but I do see a lot of pivot potential. The massive amount of capital they have on their balance sheet, some $4 billion now, provides a lot of opportunity to acquire businesses that can't completely turn around the overall picture for the company. The fact of the matter is that continuing with GameStop's current business model is a long-term failing proposition. They need to use this capital to pivot and to expand their business model instead of doubling down on what is already not working. Under the current leadership over the last 3 years, GameStop has seen a reduction in gross margins, total revenue has declined, free cash flow has declined, and again, this is comparing the last 3 years. And they did some big offerings in the beginning of the 3 years too. So they haven't been very creative or effective at using that money in the past, other than just kind of maintaining the ship. Sure, Ryan Cohen wasn't very suggestive at the meeting earlier this week, but there's a lot of opportunity for him to look at this capital and think, okay, I can acquire my way to the next level. By using its newly raised cash to acquire profitable companies, GameStop can diversify its revenue streams and reduce dependence on its traditional business model. For example, they could acquire a company in the e-commerce space, and that could provide GameStop with a robust online platform to compete with other giants like Amazon and others that have a broader range of products. Sure, they already have something like that, but it's not very good, and the numbers aren't that good either. So acquiring an e-commerce brand that is already winning, well, that would be very, very effective for them. GameStop could easily acquire other competing companies specializing in game development or digital content creation, and by owning studios or platforms that produce popular games or gaming content, well, GameStop can tap into the pretty lucrative digital sales market in a way that it's not right now. GameStop could also invest in esports. The esports industry is rapidly growing. It attracts millions and millions of viewers and significant sponsorship deals. It'd be easy for GameStop to acquire esports organizations, tournament platforms, or content streaming services related to that. This move would position GameStop at the forefront of gaming entertainment and could bring in a lot of moolah and get lots of people excited. There's also the opportunity to create some new subscription models. There's lots of people, millions of people that love GameStop. It would be easy for them to introduce a new subscription model, something $50 a month. They also could acquire some companies that have very, very popular mobile games. There's tons of companies out there that do maybe $5 to $10 million a year in revenue, and they could acquire them, use some of their expertise to bring those companies to a broader audience and make them profitable. This is just assuming that GameStop wants to stay in the gaming industry. I think it would be better if they did a Berkshire Hathaway model, where Berkshire was a failing textile company and they started buying up other companies that weren't even related. Well, I think that GameStop could easily do that and really take the overall situation to the next level and make it so that GameStop is a company that stays around for not just a decade based on this money, but based on the actual underlying business, many, many decades. And that could really, really destroy the short thesis. GameStop could also invest heavily in virtual reality and augmented reality and revolutionize gaming through that. Obviously, we're at the beginning of a big, big shift into a metaverse world, into the next generation of gaming. And right now we're at the very beginning of it, but maybe in 5-10 years, that's going to be a much bigger deal. So investments that they could do in that could put them in the beginning of a much, much bigger wave later on. Obviously, I think there's a lot that GameStop can do with this cash besides just sit there and wait. So anyways, that's my thought process. You can let me know what your thought process is down below. Let us know your overall take. We love hearing from you. Anyways, folks, that caps off today's video. Make sure to hit that ravishing like button and subscribe, and we will see you in the next one.